We don't miss any gems. Um, Let me put some prompts on the screen unless anyone wants to just riff and share kind of how pre-work went, how your chat went, if you learned anything, if you have any questions.
I'll start with our group. We have kind of mixed services versus and products. So we were talking a little bit about business insurance at the end and whether or not people were using that or needed it, and a mix of what professionals do we need. Some of us do it on our own, but at some point we also may need some professionals for taxes and things like that.
Totally.
I don't know. Anybody from my group have anything to add?
That's not uncommon to start small, right? In
Mhm.
terms of the outside help you're bringing on, and then, or start with nothing and then gradually build that kind of support system as you need it and can afford it. I'm glad you mentioned that.
We also talked a little bit about expenses that we didn't really think about until somebody's like, "Oh, you need business insurance," or "Did you think about your internet?" or these
Yeah,
things. So
they add up. Thanks, Janelle. Yeah, and Deanna mentioned insurance too. Yeah, that's one that gets missed, and I talk about it a little bit in this session. We'll talk about it in session 4 as well, but um, it's definitely something you want to work into your budget. At the very least, you'll want general liability insurance, and then kind of depending on your industry and how litigious it is, you might want or need more than that. Did anyone want to share thoughts or questions? Does anyone have any good budget tools that they use that they would want to share with the group?
Well, I worked with Elena at
Yeah.
Women Ventures, and she gave me a spreadsheet to use to help calculate the startup for the year. One of my group members did give me some pretty good information in regards to just making sure to look into the best items like to sell throughout the seasons, as well as um, putting into my startup the um, looking at the average cost for rental. Like she mentioned that that will be like my biggest expense with
Yeah.
it being a cafe.
Yeah. Totally. Unless like maybe staffing, unless you if you plan to have some staff members, but otherwise, yeah. Rent is so expensive, especially for how big of a space I anticipate you'll need, Trevon. But I'm glad you're working with Elena, and I'm gonna have to scoop that startup spreadsheet from them.
I have a tool that might be helpful for some, um, for like balancing, or not even balancing, but tracking business income and deductions. I use Stride. It's a free app on my iPhone. I don't know if it's on Android, but you can also track mileage with it, and so that's tax deductible as well. And it also kind of shows a breakdown, a comparison between your income to deductions, and it estimates the taxes you'll owe for that year. So I've been really loving this app and it's helpful.
Is it like that I just put in the chat? STRIDE.
Yes, yep.
Nice, cool. Oh, that sounds awesome. I used to use one kind of like that called Keeper. I'll put that in the chat. I really liked Keeper. The only reason I stopped using it was because it doesn't do all the functionalities for multi-member LLCs, which is what I am. So it wasn't worth the cost for me. But that's a really good app too. Really similar, it sounds like. Calista uses QuickBooks. QuickBooks is a great tool. It's hard to use at first, but once you get the hang of it, it's really, really useful. Jill uses a good old spreadsheet. Love it. And Skylar's uses the traveling photo booth uses QuickBooks, Excel sheets nerd. Oh, I'm jealous you're an Excel sheets nerd, Cav. Yeah.
I'm also
Quick,
into spreadsheets.
I'm so jealous, you guys. That's such a good skill to have. I need to beef up my Excel skills. QuickBooks is definitely the most common, and I think I talk about that a little bit tonight. Um, Zero is another really good one, specifically for business um, budgeting and bookkeeping. It's similar to QuickBooks with fewer functionalities, but it is a little bit cheaper. Okay. Well, I'm going to scooch along as, of course, reminder as questions come up, please don't hesitate to interrupt or put it in the chat. Um, this first section is kind of just like some frameworks in terms of like business finance and budgeting, and then we'll get into some of those calculations and projections kind of in the second half here. Okay. So the importance of learning about business finance by knowing your numbers, and by numbers I mean what's coming in and what's going out, and understanding kind of how that functions. It allows you to make intentional business decisions. Um, it allows you to create a profit plan for your business so you can understand what your expenses are, how much money you're bringing in, where that money's going, and how you can, pay yourself or invest it back into the business. And it acts as a roadmap for how your business is going to make money in the future. It doesn't have to be 12 months, it can be 2 months. Just as you get your bearings, you'll probably do shorter term projections. As you have more to reference, your projections will get more complicated and farther out. But some of these are just kind of like I said, kind of framework, like foundational pieces, just kind of setting the stage for what your finances will look like starting your business slash getting your business plan up. Um, it also helps just kind of demonstrate a strong and realistic understanding of your business's financial dynamics, which is critical if you are using your business plan to access outside funding. So something like a loan or a grant sometimes requires financial proof, proof of concept kind of. And then I'm blinking, like investments, of course. Um, and then I just kind of said that part. Financial project projections can be useful in attracting investors or lenders. Um, it's going to be hard to find a lender or an investor who is willing to give you money if you don't have strong and realistic projections, and not just projections, but just like I said this already, but proof of concept. Like your business plan is strong, it makes sense, it seems viable just based on the research you've done, and that goes above and beyond finances, but finances is a huge part of that. All right. And then yes, I mean, this work is estimation. There's no way, some of you are operating, I know, most of you are not. And so this isn't going to be actual. You're still figuring a lot of this out. So as you look at things like gross margins and break-even points, there are pieces of data you're just going to have to like estimate right now. It'll be based on research, but you don't know what your price is most likely yet. So just do keep that in mind. That's okay. I really want you to just kind of understand how these tools work. You don't need to be plugging in your like exact hard and fast numbers right now because you probably don't have them. Um, and these tools are meant for you to keep using. So like the spreadsheet you got, that's yours now. Like it does all those calculations for you. As you do firm up some of this information, you can always revisit that, plug it in, see if it works, mess with it, plug it in again. Like that's yours to play with now. So keep using it as you get closer to launch. And even as you revisit pricing, you can always revisit that spreadsheet too.
Becky,
Yes, Sean.
Where's that spreadsheet? You're saying that automatically configures? I guess I'm not sure I've seen that.
Oh, sure. I sent it out this morning if you have access, but let me see if I'm able to connect it to the chat.
So you sent out that today?
Yes, this
Okay.
morning.
Okay. I'm a little behind in my email, so I will look at that. Thank you. I just want to make sure I
Yeah,
know where
no
to go
worries.
to
And
it. Okay, thank
if you want to revisit it later, know what you don't need it up tonight.
okay.
But I did, oh, it's too big to go in the chat. But yeah, if you
That's
don't have it
okay.
up, feel free to pull it up, but you don't super need it. I'll walk us through everything and I'll pull up my own copy too.
Okay, good. Thank you so much. I just want to
Yeah,
make sure I know where to look because I'm like, I don't think I've seen that yet. And I would love something that automatically configures myself in my head.
it's
So thank you so
it's
much.
very nice.
Okay, bye.
All right. I'm trying to figure out which ones of these I'm actually going to be talking about. Capital is money or assets. Revenue is income generated by sales. Revenue refers to, at least like without a differentiator in front of it, like everything inclusive of like costs, taxes, shipping, costs of goods, all that kind of stuff. Um, Profit is the difference between the amount earned and the cost to produce. So when we talk about gross margins, we will be talking about profit. Expenses are the costs incurred to generate income, so that can include anything from overhead expenses like rent or internet to costs of goods sold, um, one-off marketing campaigns, anything that you're spending money on your business for. Um, Cash flow we're not getting into tonight. And then these are those differentiators I was talking about when I mentioned revenue. So gross revenue is the total before deductions. So again, things like costs of goods sold, overhead costs, um, taxes, and then net is the total after. So like I could say if I owned a business that made this much money, which I don't, but if I said I made $100,000 gross revenue last year, um, but I only made 50K net revenue, that difference of 50K is like my materials, my rent, my payroll, those things that get taken out. It's really exciting to start making money as a business owner. That's a harsh reality check when you're like, oh, I made like this much, but I really only made half that. It's going to change depending on your industry. And retail, it's about 50%, depending on what your costs are. But do keep that in mind. It's really exciting to start making money as a business, but I never want you to forget the difference between gross and net, especially when we start talking about taxes and what you have to set aside from that money you're making for taxes. Destiny, I see you have your hand raised.
Yeah, is there a difference between profit and net?
Um, there is. So, when we talk about profit, we're talking about, oh my gosh, that's a really good question. I feel like I'm not going to explain it well. They are this, in some situations, they might be the same thing, in some they won't. Profit is usually just what we're talking about when we're talking about a specific service or product. So when we talk about gross margins and we talk about profit, we'll be talking about like I spent 750 to make this thing. It cost $15 to the buyer, so my profit was 750. Versus net, that number is going to drop down a little bit more where you're like, and then out of that 750, I have to set aside a buck to taxes, this much to like rent and kind of differentiate it out that way. You're not doing net based on specific products, but I hope that makes sense. There's a few more things that get pulled out, and net is kind of like the bottom line.
Okay, that makes sense.
Okay, let's talk about paying yourself. We already did that. Okay, so when paying yourself as a business owner, the key is to start with a personal budget. The reason being that your personal budget will inform how much money you need or want to make as a business owner, especially if you plan to do it full time. So understanding what your household needs are, having a savings goal. I know the professionals say 3 to 6 months worth of living expenses. I also know it's 2026, and that's deeply unrealistic. So whatever amount of savings feels good to you. And then considering growth goals. What expansion goals do you have? And then what's kind of like the personal goal for your business? Do you just want to pay your bills and have fun? Do you want to start building for retirement? Do you want to build like an empire and then be able to kind of step away and have it be passive income? Um, so these are all considerations when you're thinking about how to pay yourself and how much to pay yourself. Um, this is critical, separate business and personal finances. Please keep them separate. You generally, I love Siobhan. I love that. Um, so when you are doing, okay, I want to start at the beginning. Super important to keep your business and personal finances separate. Because if you are an LLC, especially like if you're a sole proprietor, this is not going to be relevant to you. If you're an LLC and you're an LLC for that liability shield that an LLC offers, we'll talk about like that piece of it more next session too if you're not sure what entity you want to be at. My recommendation is an LLC. But if you want that liability shield, so that means that like if something were to happen in your business, someone sued you, they could only go after your business. They, excuse me, they can't come after like your personal savings or your home, right? It's important to keep your business finances separate from your personal taxes and run your business finances through that business account in order to maintain that shield of liability, that shield from liability, I should say. Um, that's one really, really big reason. And then another reason is that just come tax time, like right now, business owners are stressed. And the best way to make that as seamless as possible is to keep them separate. That way you understand what you can write off, you understand your cash flow better, and your accountant will not charge you $500,000 to go through like thousands of receipts and figure out what's a business expense and what's a personal expense. The chat is blowing up. So just see what's going on. Jill, yeah, that's a great question. I know that Jen, our legal facilitator who's joining us for next session, touches on that, and so we'll build on that a little bit. Um, I don't know a lot about LegalZoom. That is definitely a question for Jen. This session and session 4 do overlap a lot. So as you guys have questions specifically about entities, I might just be like, ask Jen session 4. Um, and then Janelle asked, how are shared expenses like home office, phone, internet, et cetera, handled? That's a really, really good question. It's a question for your accountant, because that's going to differ from business to business. The big question that they're going to ask will be like, what percentage did you use for personal and what percentage did you use for professional? Um, so like when I wrote off my phone, I could say like it's roughly a 50-50 split for me for my phone. For things like a home office, my home office footprint, like here in my home, is like I don't know, a tenth of our square footage. It does get that exact if you want to write those off. So it's going to be a percentage question from your accountant. But I will say too, looping back to the pre-work when we talked about finance professionals, is absolutely work with an accountant, especially when it comes tax time. Not everyone needs one year round, but when it's tax time, business taxes get confusing really quickly. And it is is so incredibly helpful to have someone who knows what they're doing, especially in your first couple of years. Maybe you'll get the hang of it and you won't need someone to do your business tax, uh, annual taxes. Um, but especially when you're starting out, you don't know what you can write off. You don't know how to write stuff off. Whatever it is, they're there to help. Um, that right. Yeah, my understanding is wait, did I misread that? That would work as writing off a percentage of your mortgage. Yeah, my understanding is mortgage and like a lease function the same. It's just like a percentage of square footage that you're using for your business. Okay, we're in the weeds. I'm gonna truck along. Um, and then, so we're on the topic of paying yourself. There are two common ways that folks pay themselves out of their businesses. One is a regular salary and one is an owner's draw. So a regular salary is just like if you're a standard full-time employee or not full-time employee, part-time employee for a company, you're getting a paycheck every 2 weeks or bi-monthly or whatever it is. Um, that is the same every time. So I guess in this case, you probably are a full-time employee where your paycheck is just that 40 hours every 2 weeks. You know that you know when it's going to come, you know how much it's going to be. Um, and then I'll kind of give the pros and cons of each one, but let me give an overview of owner's draw. So it's what it sounds like. It's just you as the owner are drawing money from your business, kind of at your discretion. So, um, if you're, these are great examples. So in an owner's draw, your business made $5,000 in profit that month. So you can pay yourself 3,500 bucks and invest the rest back into the business. The month after that, you only made $2,000 in profit, so you can't pay yourself that 3,500 again. You're paying yourself a smaller portion that month because you didn't make as much as you did the previous month. Whereas with a regular salary, you're paying yourself a monthly salary of 2,500 and it's the same every pay period. Regular salary is great if you're consistently making the same amount of money. Owner's draw is great if you are not. If your income is fluctuating a lot, which usually in the beginning kind of startup phase it is. So owner's draw, especially in those first couple years, is a lot more typical. Um, and another pro con is regular salary. I don't do a regular salary, so I can brush on this topic, but my understanding is that you can write that off as a business expense because it's like a standing, considered normal business expense, whereas an owner's draw, you cannot. And don't quote me on that. We can ask Jen. Um, but there are some financial there's some financial strategy once you are making enough for this decision to even matter that might be better for you. But again, owner's draw is absolutely more common in the beginning kind of startup phase. Okay. Um, this is okay. Remember that paying yourself is not just about survival. It's also about rewarding yourself for your hard work and your dedication to your business. It's really important to find the right balance between reinvesting in your business and taking a reasonable income for your personal financial stability. This is really important, um, especially again, if you do plan on this being your full-time job right out of the gate. Um, it's really, at least for me, because it's not my full-time job, it's really easy for me to put paying myself on the back burner. Um, and so it doesn't happen very much. I'm still in a growth period, right, where I still have a full-time job. I'm also definitely doing my business full-time, if not more. But we're working towards growth, and I have a lot of big expenses coming up as we do that. And so I don't pay myself a lot. Um, but that's because I have an understanding of my financial situation, and I know that I can do that right now, and that's not a luxury I'll have forever once I step away from a full-time job and take on my business full time, right? So that's why that pre-work of understanding your personal budget, how you can afford to start a business, to how much you can afford to like work on that business while still maintaining a personal life. Um, and then two, like, can you afford to do it full time? Or is it something that you'll be slowly building up while maintaining other part-time or full-time jobs? Um, any questions on the paying yourself piece of this or things to share or add?
Question.
Yeah.
If you plan on having employees, um, would you recommend using like some sort of system such as like ADP so that they can divvy out the pay rate and hours for
Yes,
their
I
employees? And
100% would.
then,
It's going to make your life so much easier.
okay, and then you pay yourself outside of ADP or
I don't know the functionality of ADP if it does like the ACH transfer for you or if it's something that you need to like just do through your bank. Um and ADP, oh, I love that. Jeanette said QuickBooks has payroll. Yeah, it doesn't have to be ADP. There are so many on the market now, different kind of like HR management payroll tools. So I would kind of, do your research and find the best one. But regardless, I would absolutely recommend having some kind of payroll software.
okay, thank you.
Calista asked, how do you track owner's draw? It's just a regular, like, it's just another line, right? So if you use QuickBooks, like, it would just be another line where you would categorize it as owner's draw.
Is there a way to like do a monthly salary, but then like quarterly or yearly if you have a large profit to do the owner's draw also?
Yeah, for sure. Like, again, it would just be, you'd have to talk about this with an accountant, but it would just be like the salary is the portion that you can write off, right? And then the owner's draw would just be like a bonus or whatever it is. Yeah, you can absolutely use both kind of at your discretion. You're the owner, you guys. You make up the rules to some extent. Like the IRS has something to say about everything. But yeah, that's a great question. Okay, I'm gonna keep us trucking just because we do have a lot to get to. Of course, please do take some time between now and next week to reflect on financial strategies that you can use that would allow you to pay yourself from your business. Um, as you go through this and you weigh the pros and cons of, um, sorry, I'm trying to go back, like all of this kind of stuff, do these considerations. And then this might be too early for some folks to be thinking about, but if you have a chance to reflect on that. And then, of course, if you have questions about paying yourself, you can always reach out or we can chat about it in session 4. Okay. I'm going to touch on taxes a little bit. I'm not a tax accountant, but I've done business taxes. And so that's my experience. Um, as a business owner, you are considered self-employed. Yes, even if you're also working a full-time job, it's really cool. You will be required to pay self-employment taxes, excuse me, in addition to federal income taxes, payroll taxes if you have employees, and state and local taxes. Um, as someone who's self-employed, okay, let me start over. If you have like a full-time job or any kind of job, I keep saying full-time, but any kind of job where you're getting paid a paycheck on a regular basis, they're pulling out taxes for you, right? Like we see that if you go in your payroll system, you'll see all the money that the government takes. As someone who's self-employed, that's not automatically being drawn from anywhere, right? Like you're the one taking that money in, putting it in your account, and it just kind of sits there unless you're doing something with it. And so because the government isn't getting that money every, 2 weeks or whatever it is, um, you have to pay quarterly estimated tax payments on that self-employed income. Um, yeah, so that's just something to keep in mind. It's another deadline to add to your calendar. What I will say is that, and this is maybe terrible advice, but this is realistic advice is that as a small business owner, I don't make a lot of money in my business and I don't pay estimated quarterly tax payments because the penalty is so small. Like if you are starting really small and you have an eye on just like very steady growth, sometimes it is worth a lot more hassle to do it than to just eat the penalty, especially if your income like fluctuates a lot. Like ours is like nothing in the first quarter, and so having to make that in the first quarter is really hard. Um, you can always like when you have the money, go pay it, like a chunk of it, right? Um, and so keep that in mind. Some usually the penalty is really small if you're starting really small. Um, but I do recommend ta talking with your tax accountant to see if it's worth the hassle for you. This is coming from my accountant, is that she told me most of the small LLCs she works with don't pay them quarterly. And I said, great. Generally it is recommended that you save 25 to 30% of your income for taxes. That is probably oversaving depending on your bracket, but better to oversave than undersave. And it is a lot of money, and that's just how it goes. Again, strongly recommend working with a tax accountant, especially when you're starting out, to make sure that you're doing things correctly, that you're writing off every possible thing you can write off, that you're categorizing things correctly, right? We do have a bunch of tax recommendations or referrals on our client directory and client resources pages on our website. So if you're looking for an accountant, you can check those out. And they can help you with things like filing your quarterly estimated taxes, doing your annual taxes, paying your sales tax if you need them to. Like if you're just stretched thin, it's a nice thing to not have to do, but it is pretty easy to pay your sales tax. Um, Most small businesses don't need a CPA. So you'll hear someone call themselves a CPA, or hear someone call themselves an accountant. A CPA is a lot more rigorous. You have to pass tests and take classes and all that good stuff. Um, an accountant is someone who usually has like an accounting degree, but maybe it hasn't done like all this other certification. Um, CPAs are usually a lot more expensive than accountants, and unless you have a really like tricky tax situation, usually you just need an accountant. Jill, I'm jealous. That's a great contact to have. Um, but we do have a lot of referrals again on those web pages. Or Jill, hook us up with your mom. Give us the Women Venture rate. Any questions about taxes? Again, I know I just brushed on it. Like it's gonna be different from industry to industry, business to business, if you're starting small, if you're huge, if you have employees. Um, and again, I'm not a tax accountant. That's why we brush on it. I don't want to give you bad tax advice. Um, but any like big picture questions on taxes?
I have a question. My understanding is that in a small business, you pay taxes on like the money that you have after expenses. So like net or profit.
Yeah.
Okay.
Yeah. So you are taxed on the money you have left over after write-offs or like what do they call it? There's a funny like old-timey phrase that they call it like normal and usual business expenses or something like that. Um so yeah, so like if you like your gross was 100,000 in revenue last year, you're not getting taxed on $100,000. You're getting taxed on 50,000 or whatever you spent to like make the business happen. But yeah, that's a great differentiation. Like that would be bonkersville, especially for like product-based businesses where you do have like decently high costs of good. Okay, cool. Um, Couple more things here before we get into a short break and then some of these projections. just some additional financial considerations as you start building out your business plan and just like want to more deeply understand where your money is going to go. Um, Reinvesting in your business. So in the early stages, it might be helpful to reinvest a significant portion of your profits back into the business to fuel its growth. Of course, balancing your own financial needs with that reinvestment. Um, you'll hear a lot of people say, like, you won't really be able to start making money until a couple of years in. That's what they mean by that. Like, you are making money, but usually it's just going right back into the business. Especially if you, again, are starting small and trying to work towards that steady growth. So if you make like $10, but you started small, you know what I mean? Like that's going right back into marketing or restocking inventory or whatever it looks like in your business. Um, Business viability, make sure your business is generating sufficient revenue and profit to cover operational expenses and obligations. This is something you should be doing before you ever sign a lease or sign a client or open your doors, um, is to run through these projections that we're doing and ensure that your business concept is viable and that you will be able to pay for what you need to pay for. And also, again, ideally, pay yourself a little bit of money or a lot of bit of money. Seasonality is something that I think gets missed in a lot of business plans. Um, Business will likely ebb and flow throughout the year based on the type of work that you do. And so plan and save for those slow times to keep your bottom line healthy. At least in retail, our slow times are like the first month of the year, and the summer tends to be slower. The holidays are crazy for most retail. And so understanding that so that you can, like, it feels so good to make so much money during the holidays. And then you're like, "Ugh, wait, I have to set this aside for taxes and I have to keep some savings for these next couple months that are going to be slow because I'm not going to be generating as much revenue." So do keep that in mind. Keep some savings set aside for those slower months so that you can still pay your bills. Also, a really good way to learn about seasonality in your business is through market research. That's something when you're looking at industry, you should be considering seasonality and seeing if there's any kind of trends within your industry. And then unexpected costs, emergency funds. As you save and plan, be sure to leave some wiggle room for unplanned expenses and emergency funds. There's always something, you guys, just like in life. And so just making sure that you have, and I do have a slide for this actually, um, have a little bit of money if like this is my worst nightmare, but like a business that I love, she leases a brick and mortar and the HVAC system went out over the winter or the heat, I don't know, something, heating or something. Um, and part of her lease agreement was that that was a one of her expenses, right? So like depending on your lease. And they had to pay for that. They had to pay, I don't even know, $15,000 or something to get this new HVAC. Um, and so it's always something. If you're a homeowner, it's like that. I'm not a homeowner. I just have friends that are homeowners, and it's like there's just always something, right? And so ideally, this it's the same as like in personal. Ideally, you're having 3 to 6 months worth of operating expenses saved. I also don't want that to like scare anybody. Most small businesses, especially if your overhead expenses are pretty low, don't have 3 to 6 months saved. Maybe you have a month or two, but it is a good goal to work towards to have just like a nice emergency fund, ideally sitting in um, a high interest savings where you're making money for your money sitting there. But yeah. Any questions or things to add on these reinvesting, viability, seasonality, or emergency funds? Okay, you say so. Well, we're at break then. Okay, cool. I'm like doing good on time. We're all doing good on time. Um, let's take a 5 minute break. So we'll come back 7:11-ish. And then we will start getting into um recurring expenses, startup costs, and some financial projection calculations. 7:11. Thanks, guys. We'll come back in a minute or so, guys. Okay. So next we're going to talk about recurring expenses and startup costs. Again, if you would like to follow along and use that spreadsheet, you can take a minute to open it up now. It is in the email I sent out this morning and it's in the files in Talent LMS. I tried to put it in the chat and it's too big. So it is a big file. Um, so if anyone wants to follow along, I'll give us another minute to pull that up. If you are on your phone or would rather just kind of watch me click through, that's totally fine. However, you're gonna kind of learn best. Okay. Um, so let's see. Preparing to launch, two crucial numbers to deeply understand are your startup costs and your recurring expenses. Startup costs are expenses incurred in the process of opening your business. So this could include a security deposit on some kind of like brick and mortar space or office space, equipment costs, technology, um, branding, if you're paying like a graphic designer to do any of your branding. There's a lot of things that can be included in startup costs. Um, I do have an example and a really very simple table that we use in getting ready that I can get on Talent LMS. Um, Actually, there might even be something like that. Oh, duh, the spreadsheet. I don't have an example in the spreadsheet, but the spreadsheet is basically that table. I can share the example though, just so folks can kind of see what that looks like. Um, it's going to look really different from business to business. So another useful market research is looking at example business plans or real world business plans from businesses in the same industry as you and seeing what startup costs they included. Um, you'll just know some, right? Just based on your knowledge of your business and the industry, what you will need to do your work. But I do recommend doing some additional research just to make sure you're not missing anything that you maybe didn't think of. And you do need that to calculate funding needs. So, um, both whether or not you're seeking outside funding, understanding your startup costs is so important because I see it too often where folks don't run these numbers before getting kind of too far into it and they like get half started up and then run out of money because they didn't do this work first. And then you're just kind of stuck, right? So like if you've signed a lease, you're just kind of stuck. Like you probably have to pay a large fine to get out of a lease. Um, and it's unfortunate, and we do see it a lot. And so that's why this part, understanding your startup costs, is so crucial. Um, you'll also need it to like if you are seeking outside funding, that's something you would include in your business plan. And then recurring expenses, these are costs that occur on a regular basis to operate your business. This includes fixed costs and variable costs. So a fixed cost is something that is the same every month, and a variable cost is something that fluctuates. Um, so a fixed cost would be like rent, and a variable cost would be heat, like heat changes, right? We're all familiar with that. Um, Super important to understand your recurring expenses in order to set budgets and sales goals for your business. Um, it's not like startup cost is one piece of the puzzle, recurring expenses is the other big one where like cool, you understand what you need to start, But then understanding your recurring expenses means that you understand bare minimum at least how much you need to make in your business to keep it operating. Any questions about these terms?
No.
Okay. Thought I heard some, but maybe not. A few resources as you are looking to research startup costs and recurring expenses. I got ahead of myself. I always do this. Start with a list of things you know, based on research you've already done or your personal knowledge of the business. Again, most of you are entering business types, industries that you have already worked in or that you're familiar with in some capacity. So I do recommend just kind of starting there so you don't like overwhelm yourself right out of the gate. And then once you hit a point where you've kind of like hit a wall and you're like, that's it, that's all I need, then do some outside research to see what similar businesses are listing as startup costs. A few good resources for these are linked in these slides on Talent LMS, but LivePlan has a ton of great example business plans. So does sbdcnet.org. And then SBA Gov has like a write your business plan kind of informational guide where they list a ton of startup cost examples. Okay. Oh, and I do have a short example. So, um, this is a very brief example of what startup costs and recurring monthly expenses might look like. So basically, you're listing the thing and the cost. So, brick and mortar security deposit, equipment, space outfitting. So if you're moving into like a brick and mortar and you have to, I don't know, add shelves or paint, that would be space outfitting. Business registration is one that all of you are going to have, I imagine, unless you're just doing the sole proprietor thing. But if you're registering as an LLC or some other kind of entity, you're going to have a cost associated with that. Website setup is a really common startup cost, as well as branding, like I mentioned. Um, Print materials. So that can be a startup cost because it's like pre-launch marketing, right? Like you need to get the word out about your business to serve people. Um, and so any kind of like print materials or online paid marketing campaigns, if you're doing any kind of like paid PR kind of stuff, um, those can be considered startup costs. And the reason I'm telling you what can and can't be is because you can write off startup costs up to a certain amount on your taxes. And then operating capital. So you can actually write off operating capital or like emergency savings as a startup cost. So if you want like a little cushion in your business savings account right off the bat, and you can afford to do that, you can include that as a startup cost. Um, and then recurring monthly expenses, things like internet, whatever your point of sale system is, whether that's Shopify or Square, mailing costs. So if you were a product-based business and you're doing any kind of shipping, rent, utilities, those are just a few examples. Again, it's going to differ pretty wildly from business to business, but these are just a few examples.
For the recurring monthly expenses, if you're working from home and like you work out of your home, do you add all these expenses there too? Even though it's like, I'm gonna live here regardless.
Um, so that's going to be something you talk about with your accountant because it's going
Okay.
to depend on how you're tracking it for your taxes. Sometimes it's not worth writing off, and sometimes it is. Um, if it's something that you're going to be paying for regardless, like most of us, like we're already paying for our home and our phone, like and our
Mhm.
internet, whatever. A lot of times it's just, and especially if you're smaller, it's just not worth it to write to track and write it off. Um, this is what I've learned from my accountant, and maybe your different accountants give different advice, but um, Basically, the answer is it depends on if you're writing it off, because then you can include it in your business expenses.
Okay,
Yeah.
thanks.
Okay, so there is a tab in that spreadsheet titled Startup Costs and Recurring Expenses. I'm going to pull it up. So this is where you can start to track. Um, you can put the item here. If you even want to put like a link here, I think that's really helpful if you find a specific thing that you know that you want to purchase for your business. Put the cost here. If you're farther out from launch, understand that this is probably going to go up. Um, Recurring monthly expenses, some of these you're not going to have. Some of these you're not even going to know. Some of these you're not going to know how much they are. That's fine. Start with what you know and build it as you get closer to launch. Note whether it's fixed or variable, and then the associated cost. You also have a section on this specific page for startup funding. So, depending on whether you're self-funding, if you're getting a couple loans or a grant, um, you can list those here and add the amounts in this column. Um, Ideally, your startup funding is a little bit bigger than your startup costs, right? So, like, this is how much money you are putting into your business to start it up, and this is how much money you need to start up your business. So, it makes sense that this number should be the same or even better, a little bit bigger. And it is, as long as these like cool codes and stuff work, this should turn green when it's equal or greater than your startup costs, because that means you've got enough money to cover everything. And this is really easy to use. It'll add it as you go. Again, this has been shared so many times. If you run into any issues with like the anything not adding up and you want to be able to like, let's see if this is working on my end. Okay, so like in theory, you should see this like change as you add things to these columns. If you run into any issues with that as you start playing around with this, just let me know and I can get you a better, cleaner version. Um, so if we already started our business, do we just do recurring? Yes, that's correct. So if you're in business, you've been in business, you don't need to calculate startup costs. You've already incurred those. You can write off startup costs, like you don't have to purchase something and write it off the same year. So if you never have written off startup costs and you're already in business, it's probably worth talking to your accountant about if you can still write those off. Because I don't know if what the like length of period is, but I know that it doesn't have to be the same tax year. You would just need, of course, like receipts, which if it's been years, that might be tough to track down, but okay. Anything to add or any questions about startup costs and recurring expenses and why it's so important? Okay. Okay. Um, I'm debating if we have time to play around in these. Let me see what we have left, because if we do have time for you guys to just start clicking around, I would love to do that. And I think we do. Let's just do like 5 minutes um of checking out this tab. This is the easiest tab because it's just adding stuff. Um, so we'll do like, I don't know, 3 to 5 minutes. We'll see where you guys are in a couple minutes. But if you do have this up, just start playing around with it and see if it makes sense to you, if it works for you. Skylar, did you have a question?
Yeah, sorry if you already said this, but if it's like so like payroll is variable, so what would you put in for the monthly expense?
So like you're here. Oh, it's variable. What would you put in this column?
Yeah, yeah,
I
exactly.
would average it out. So if you have enough data to average it out, like 6 months even would be fine. I think that's kind of where I would start just to get a baseline idea of what that looks like. Feel free to shout out questions or put them in the chat as you guys mess around with this page.
I put my small business essentials class in my startup cost.
I love that. Write it off, baby. Write it off. I love it. That is really cool. I don't know if anyone's looking at my screen, but I did just test this green function. So if your startup funding is greater than your startup costs cell, this will turn green, which is what you want to see. And yeah, this is your spreadsheet, so use it in a way that makes sense for you. Some things aren't going to be as easy to move around because there are like calculations hidden in some of the cells. But especially like all this blank space, if you want to add more links or like, I don't know, if you have like pictures of receipts, you could even throw them in here. Like you could almost use this as kind of just a way to keep your costs organized as you start up. That's another reason I do recommend like some kind of budgeting app because you can take pictures of receipts and save them. It's so handy. You don't have to have like 1,000 paper receipts. Um, so even if you don't have your business bank account set up yet, if you're starting to buy things for your business, save those receipts. Because you will be able to write those off, even if they're not through your business bank yet. There's always that weird kind of like lag where you're starting, but you're not totally set up yet. You might not have a business bank account yet, but you can still save those receipts and put them in that spreadsheet. Okay. Any last questions about startup costs or recurring expenses? Cool. Yeah, that's an easy one. It's easy, but it is important, and I will not stop stressing that. I do not want anyone to get in that situation where you're like partway through launch and you're like, shoot, I just ran out of money. And that's why also when you do the funding column, the sources column in that spreadsheet, always great to have it be a little bit bigger, right? Just because you might get partway through and be like, shoot, I forgot this thing on my startup list, or this thing is more expensive than I thought it was going to be, or like, I didn't even know I needed this thing until now. Okay, now we're going to talk about some um some more kind of calculations, like kind of foundational projection tools. Um, these are going to set the stage for like understanding the viability of your business concept. And these are great to include in a business plan. Okay, so before I get into gross margin, just some more lingo. Costs of goods sold. You're gonna hear that all the time. As you're starting out, and then also as you do business. Your accountant's gonna ask you about your costs of goods sold. You'll hear it called COGS too. These are the direct costs associated with producing a particular product. Not every product and not even every business has costs of goods sold. Generally, it's a term that you'll hear for product-based businesses, and it generally refers to things like inventory, materials, packaging. For my retail business, it's inventory if it's in person, and then if it's like a shipping order, it's inventory plus packaging expenses. So, um, if you're a product-based business, you'll have COGS. If you're a service-based business, you might hear this COS, cost of services, and this refers to the direct cost of providing a service. These are expenses you incur only because you're delivering that specific service. So this is like if you are a hairstylist and you're doing someone's color and you need foils and dye for that specific appointment, that's a cost of service. So you're providing a service to the person, but there are expenses associated with delivering that service, right? This is a one that I see a lot, venue rental for a paid workshop. So people who put on classes or like trainings, I see that a lot for consultants. You're only renting this specific conference room for this specific workshop. That would be a cost of service. Some businesses don't have either of these. So if you are a service provider, you don't have any cost of goods sold. And if you are a service provider who like you're just using the same, you know, like materials or software or space or whatever for every single gig, regardless, you wouldn't even have cost of services. And that's fine. It just informs your margins and your write-offs. Does this difference make sense to folks? Does anyone have questions about Alexa's asked car rentals? That is such an interesting one. Oh, that's such an interesting one. I think I would have to more deeply understand what kind of expenses go into that for you, Alexis. And I hate to keep saying it, but I think it's something to talk through with an accountant because especially when you have such like high value, like I don't know if your overhead's high, but you're renting out valuable things, cars. I imagine like the upkeep of that is expensive, but I don't know if that would fall under just like overhead or cost of services. And I would talk through it with the accountant to make sure that you're writing off all the good stuff and not missing any of those. Yeah, that's a unique one. That's a unique one. Um, Two reasons it's really important to know your COGS or your costs. And part of the reason that we just mentioned with Alexis. I'll start there since we talked about with Alexis. You can write off COGS as a business expense. So when you're filing your taxes, um, it's a special category of expense that's deducted from your total sales revenue. So we talked about that with Destiny, to determine your gross profit, which reduces your overall taxable income. That's a fun sentence. But it is something that you can write off, right? So when we do our taxes as a product-based business, at the end of the year, our accountant asks us what our ending inventory for the previous year was and what our COGS were. And the difference between those is basically like, no, the COGS is what I can write off, right? And then the ending is like our profit. Um, the other reason, so I jumped around a little bit, is pricing. So by knowing what your cost of goods sold is, you can better understand how to price your goods or services. So calculate your COGS, research your industry's gross margins, and you'll have a calculation for how much you should be charging. And that's what we're about to do. Skylar asked if most businesses have both COGS and costs. um, I'm laughing at how silly these acronyms are. No, no, most businesses don't have both. Um, like for me, I'm purely retail. Right now, I used to do some kind of like service, like book clubs and stuff. Right now, I'm purely retail. So I don't have any cost of services. Um, if someone is purely service-based and they are never buying like product to sell or materials, they wouldn't have cost of goods sold. Some have both, some have neither, some have one or the other. I'm so sorry. That's a really disappointing answer. Um, Destiny, did I see your hand up?
Um, I'm interested in what you mean by like how COGS can be written off as a expense, especially since, like, for my business, I make cookies. And so I'm already writing off or keeping track of the expenses of the ingredients. So if I'm writing off my cost of goods as well, does that not mean things are written off twice? Or I guess I'm trying to understand like how inventory can be written off if it's already been written off as an expense.
Yeah. So you, it's not going to get written off twice. Um, I would just, it's going to just depend on how you categorize them. So it's either a co COGS or it's you're just calling it an expense. Um, and I don't think one is worse than the other. I would maybe talk to an accountant if one makes more sense, if there's like a higher write-off or something. Um, if you're just classifying your like ingredients as expenses, I think that's fine. You couldn't also categorize it as a COGS. It would just be one or the other.
Wouldn't it
Does that make
be
sense? Okay.
like the ingredients would be you're writing off the expenses and then like say you were selling like a decorative cookie sheet or something or a display something with it, like you had products that went along with it that you were selling, that would be the COGS. Is that
That would be COGS too. Yeah.
okay?
Anything that, let's go back to that definition. Anything associated with producing a particular product. So that would be for like baking, materials, like ingredients, and then packaging would also be COGS. I don't know what else. Like decorations would be COGS. Yeah. Anything associated with producing a particular product. Does that feel like a good enough answer besides me
Yeah,
telling you to ask an accountant?
that
Okay.
no, that totally makes sense. Yeah.
Okay. Okay. Cool.
And I see the value between like knowing the cost of goods sold to help with pricing and
100%.
not necessarily using it as a tax write-off.
100%. Yes. And that's what I'm going to get into. So, um, here's an example of a COGS. So, if someone's selling a candle, they need the jar, they need the wax, they need the scent. And in this specific instance, they're including their time or their labor. I don't know businesses that do this. Most business owners that I know, again, are just doing that owner's draw and they're paying themselves when they can. If you're paying yourself a salary and you know you're paying yourself the same like every hour, for example, you could include this. So this is going to depend on if you're doing an owner's draw or if you're paying yourself the hourly rate. Um, so for this specific 4 ounce candle, their COGS would be $5. Okay. And then here is the example I gave earlier. So if you're a service provider, but you do have materials, and these don't have to be physical materials. If you're, say, a graphic designer and you have a client that you need one specific software just for them that you have to go out and purchase to do this specific project, that would also be a cost of service. It doesn't have to be a physical thing. But say someone's getting their hair colored, the hairstylist is buying dye, foils, gloves, and they're paying for an assistant who's also helping with this appointment. So their cost of service for that specific appointment is $106. Yeah, so Destiny, like what happens. Like, especially in retail, I think that sounds average. Like, usually when you're a product-based business, you're seeing like a 50% margin. Um, I would continue to research average margins in your industry. Maybe it's different, but I know in most like retail product-based businesses, it sits kind of around that 50%. And that's again why this calculation is so important because it's like grounding. Like it gets really exciting to be like, oh my God, I can make this much money through my business. But reminding yourself like, well, ingredients are expensive. Have you been to the grocery store lately? Um, and so I'm glad that this is resonating and like is making sense to folks. Okay. This is the calculation for gross margin. So the reason we went through all that COGS stuff is because that's part of this calculation. So the percentage of revenue left over after you subtract your direct costs is your gross margin. So you're going to take your revenue, which is like if you think about revenue as just like the client, the cost to your customer, minus the costs, direct costs associated with that specific product or service, divided by that revenue again. Okay. I have an example. So we're still selling candles. So a customer is buying a 4 ounce candle for $11. It cost the maker $5 to make that candle. So that again is including their time and materials. So they're doing 11 minus 5 divided by 11 and getting 55%. So even if you don't break it, if you don't do like the division part, if you don't do this bottom part, you'll just get a number instead of a percentage. And that can be helpful too, just to understand like I'm selling this thing for $11. It cost me 5. That means I'm making 6. Because it's really easy for your brain to say, I'm making $11, but that's not usually the case. So just that top piece, that revenue minus COGS, that can be a really helpful kind of standalone measurement. But when you divide it by revenue, you turn it into a percentage, and then you can compare this to like industry standards. Jill, go ahead.
So for me, I don't think I have COGS or costs because it's like a service that I myself
Yep.
offer. And
Yep.
really, all I quote unquote need is an email address, but I have like, because I send an email report afterwards, but I get that like through my website subscription, which is yearly.
Yeah.
So it sounds like I don't have any of that, and all of that, all of the expenses around like insurance and website and stuff like that would just be like a regular like cost of doing business.
Recurring expense. Yep.
Okay,
Yep.
thanks.
And that's totally normal. It just means that you won't have those write-offs,
Okay,
which is fine because you're not spending that money, right?
yeah.
And if you do have expenses, they would just be expenses, and those might be different write-offs. They just wouldn't be categorized in this way.
Okay, thank you.
Yeah. Yeah, that's not uncommon for folks to have neither. Especially, yeah, like Jill, like purely service-based. Um, okay, let's do another one. So you have a 10 ounce candle. Actually, these numbers are confusing. Like, you don't need to know the ounces because I feel like that's just adding another number to the mix. So let's say this accessories kit. You're selling it, so the revenue is 21 minus 9. So that means that you're making $12 on the candle. You're not making 21, you're making 12. And then if you divide that 12 by 21 and then times it by 100, that's how you get a percentage, is 57%. So again, those standalone numbers, really useful just for your own brain to understand what you're making on specific offerings. By doing the rest of the calculation, dividing it by revenue and getting that percentage, this is a really helpful way to compare your gross margins against industry standards, which is pretty easy information to find through market research, through some of those resources that we shared in session two. And most industries have like standards. So, like I've said 20 times now, in retail, it's around 50%. In service-based businesses, it's higher just because you don't have as many costs. Um, and then I don't even know. I don't know any industries where it's like obscenely low, but it's going to differ depending on your industry. Okay, so let's pull up the spreadsheet. I'm kicking myself for letting us do a work session on startup costs because now I'm looking at the time. Um, let's just take a minute if folks have it up to walk through this with me. So if you click into the gross margin, there also is an example. There's example ones here. I didn't mention that. These are the same ones that are in our slides, but if you just have this up and want to peek at some of these examples, um, but if we go ugh, to the gross margin tab, insert a product or service. So I'll say a book. That's what I sell. If I'm selling a book for $10, that usually means that I bought it for like $5 or $6. And that means my gross margin is 40%. That's why the spreadsheet's really nice. It will literally do the calculation for you. You don't have to do the math. If I'm selling a sticker for $4, I usually bought it for $2, and that's 50%. This average gross margin cell will continually update as you add items here. And I just want to say a reminder that most of you are not going to know your exact offerings or your prices yet, and that's fine. I just want you to understand how to use this tool and why it's useful information to have. Um, but as you get closer to launch, just keep playing with it and see where your margins are sitting, if they're still lining up with industry averages. Um, and I keep saying industry averages. You don't have to be exactly on par with industry averages. If you sell a stellar product and you do like, you know, stand out in like a quality way, your margins can be higher, and that's great. If accessibility is important to you and your margins are a little bit lower, that's great. But do kind of use it as a benchmark to inform. Um, and so as you start thinking about offerings, if you're like, well, I know that I want to sell this thing, and I know that it's going to cost roughly this much, like based on my research, how much would I have to sell it for the margin to like make sense, right? So you can play around with it in that way too. Before I move on, oops, to break even, any questions or things to add about margins, gross margins?
Quick question. The chart that we have, it says read only, but it's allowing me to make changes or whatever to play around with it. Um, will this information be able to save on this financial management
Yeah, you
document?
should be able to, if you see an option to click enable editing, or if you don't see that option, you should be able to save it.
Okay. Is this allowing me to
Okay, if it's
see
allowing you to
numbers?
edit, I think that's probably already checked then, and you should be able to save it. Just let me know if you run into any issues. Again, spreadsheets are wonky, and I know especially like if folks don't have Excel, if it's easier for people to have a Google Sheets version, let me know because I do have one of those too. Um, but yeah, just let me know because I know that they can get wonky as they get reshared over and over again or moved between programs or whatever. Okay, I'm going to scooch us along. We've got 10 minutes. The last calculation that we're going to talk about is break-even analysis. So this is a way to calculate the point at which your business will become profitable. So you need to know how much you've invested in your business. You need to know a lot of information. You know how much you've invested in your business, what your recurring costs are, what your um, selling prices are. I think that's it. We'll talk about it in the next slide. Um, This is a really cool calculation. It's a great one to include in a business plan because it illustrates to lenders, or investors or whoever you're working with that your business will in fact be profitable, like you're proving it. And so you're showing like this is viable, this will make money, it will just take this amount of time, right? Okay, so some variables that are needed to include, you'll see it referred to as this, like BEA. I'll just call it a break even. So you'll need to know your fixed costs. So we talked about that during the startup costs and recurring expenses section. You'll need to know your variable costs and you'll need to know your selling price. Um, what does this say? This is a weird note. I'm going to skip that. Um, so what the calculation looks like, this is the trickiest one. That's what I'll say. Not only because it has more variables, but it just is one that I think like it just doesn't fit into like a framework that you have. Most people have. If you are like money or like number minded, you'll get this. This was a tricky one for me to kind of wrap my brain around, but this is what the calculation looks like. So you take your fixed costs. So again, these are things like rent or your phone bill. You'll take the selling price of a specific offering, or if you have a ton of different offerings, I recommend finding the average. And then minus your variable costs. So this is divided by. So these again are things like materials, labor, very overhead costs that vary from month to month. Things like utilities frequently vary from month to month. And that's how you'll get your break even point in units. So what I mean by units is that it's telling you how many things you need to sell in order to make back the money that you've invested in your business, if that makes sense. You can go on to get this into a dollar amount by taking this number and multiplying it again by that selling price or that average selling price. And that will get you to a break-even point in dollars. Again, this is confusing. If you're not getting it, that is fine. Um, Here is a practice kind of example. So we're taking our recurring monthly expenses that we did on the first sheet, 2070. We're dividing it by our selling price. So this individual must have found that their average price of a product is 22.50. They're subtracting their variable costs. So they have a very low variable cost. Maybe this is like their domain or something. I don't know what this is. Very low. Um, and that's getting them this number, 159.25. What this number means is that they have to sell 159 of these things that cost 22.50 to get this money back. Okay. And then you'll take this number, if you want to get it to dollars, you'll take this number, 159.25, times the selling price, 22.50, to get 35.83. So that means that they have to sell $3,583 worth of whatever it is that they're selling to make their investment back. Okay. Is that clicking? That is a weird one. Again, the reason this is useful is because you can see, okay, I'm selling like, I'm totally blanking on like a great example. It just helps you understand how much you need to sell of something to get that money back. So if you understand, like, again, taking that average number, because most people have more than just a single offering that costs the same, um, taking that average number and understanding, like, okay, maybe this is a feasible number if you're selling like single books. If you're selling like some kind of service package where you have to provide 159 like clients that specific service, that's going to take you a really long time to get to. Does that make sense? So like it helps with that kind of strategic planning. Is anyone totally not getting this? Does anyone have any questions?
So is this per month how much you need to sell?
This is per, this is not like a per. Okay. That's a really
Because I'm
good.
looking at, because it says recurring monthly expenses is 2070. So this is saying that I would need to sell $3,500 worth of stuff per month.
Yes, 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 yes. Great
Okay.
question. Yes. So, um, you can do this in whatever way makes sense to you. So this one is by month. That's a great question because that's what their recurring monthly expenses are. So that means basically they're spending 2,070 on fixed costs, and then they're also spending money like providing that thing, right? Um, and then they're also spending money on variable costs. That's why like this number is not just 2070. That's not what they need to break even. They also need to account for what they're spending on variable costs and what they're spending on products or services. Cav's getting it. Any other questions? Anyone need more clarity on this? And again, like you have this page that will do that work for you. So you can just plug in those big numbers and see what it spits out and just kind of like mess with it until it starts clicking. Because it might take a bit of just like seeing it in practice, and that's totally fine.
Oh, so this one's talking about annually, and it's variable cost of item, not variable costs of running the business. I think that's where I was getting confused.
That's, yes, that's where this 950 is. So this is, come on. When we talk about variable costs, I flubbed that. You're so right, Jill. This is the variable cost of the product.
Yeah, because I was like 950 per month. That is like outrageously
Literally, that's why I was
low.
like, why are they spending 950 on a website? No, so variable costs of the product. That is such a great call out, and I miss that. So that's why you're understanding like what these differences are, right? Because that's almost giving you like your
Yeah.
gross margin. Yeah.
Yeah. So I think the recurring monthly expenses is also, I don't know, is it fixed cost of the item or fixed cost of
No,
like the recurring monthly
that's going to just
expenses?
be any recurring monthly expense.
Oh, any. Okay.
Yep. Because you're having to cover those costs.
Got it.
And you can change this. This one does say annually. If monthly makes more sense for you, it's just going to depend on what's making sense for you, what you're trying to understand.
Sweet. I got it now. Thank you.
Cool. Cool. All right. Well, that is a tricky one, and it's the last one, which feels terrible. But you have to kind of build to that because it uses so many building blocks from the other calculations. As folks play around with the spreadsheet, with just doing, if you want to just do those calculations yourself, filling it in, please don't hesitate to reach out. Um, I'm not sure how much time we'll have in session 4 live to walk through like the spreadsheet, but you can always give me a call or shoot me an email and we can work through it. And I know that we're coming up on time here. If you have any action plans that you want to set for yourself for the next week, please feel free to do so. You don't have a neighbor because we're in a virtual classroom, but tell your cat about it. This is what next session looks like. We'll have Jen Riza, who is a business attorney, talking about legal and regulatory requirements. Really fun stuff. And then we'll talk about operations in the second half. This is a great session. If you have questions about which entity makes sense for you, understanding your like liability, she'll talk about insurance, all that good stuff. This is a really great session. Jen is amazing, and just an absolute fountain of knowledge. Jill asked, do we need to have our business plan finished by this session for a review? Just as long as you turn in your business plan before session 5. Like literally 5:59 before session 5. That's cool. Just before session 5.
Okay, so the business plan, is this the Impact Creative Agency business plan? Is that like an example?
Yep, that's just an example. You don't have to follow it exactly, but that's just kind of so that you can see what one looks like. We have a blank template in Talent LMS that you can use too. Again, you don't have to use that template, but it's there to build off of.
Okay.
And Skylar, absolutely it can be a rough draft. Like so many in this room are months or years away from launch. I don't expect you to have like a final draft. So please, if you want any kind of feedback, please feel free to turn in what you got.
Yeah, when I go into my talent thing or whatever, it don't have nothing in there for me like that talent LMS. Like, let me see.
Let's look. Let's
I'm
make sure
gonna,
you're in the class.
yeah.
Um, I'm gonna troubleshoot with Alexis here, but that's all I've got for you guys. If anyone has any questions after I help Alexis, feel free to hang out. Otherwise, we'll see you same time, same place next week. Thank you guys.
Thank you.
Yeah, because that's like